Hello guys, this is Big James FX. Welcome to my YouTube channel. On this YouTube channel, I always drop educational content, forex related content. So I'd love us to subscribe and turn on our notification button. And yeah, let's get straight into the video. So welcome to my second episode.
Good to be here.
In the last episode, I actually taught him how to not probably how to trade, but I introduced him to Forex. He was a complete beginner, and I explained a lot of things to him, which he's currently working on now.
Definitely.
And today, we are about to take it to another level. So, yeah, based on our topic in our last episode, I hope you understood everything.
Yeah.
And yeah, can you share about a few things that you learned?
Yeah, I think I learned about Forex being a business and not being a scam and gambling like every other person think it is. And also I learned about like the trading currencies and I learned about different sessions, the Tokyo sessions, London sessions, and the analysis too, the technical analysis, the fundamental analysis. Yeah, I think I'm picking it up very fast.
Impressive. So yeah, today we'll be taking it to another level, like I said. In today's video, I'll be teaching market structure. So I'm going to make it brief so the audience can actually follow up. But I'm not just teaching you, I'm also teaching the audience. So if you're a newbie, I advise you to take this video very serious. Watch it and also share to your friends and your family. So what do you understand by the word market structure? Have you come across that word before? Market structure.
Not really.
Well, you know the meaning of structure.
Yeah, structure is like a foundation, a well planned, like a systematic. Yeah.
Okay. All right. So I'll just explain. Let me just use probably the construction engineers, right? Before they come up with the finishing of a beautiful building, this old skyscraper you used to see.
Yeah.
They first of all start with a structure, right? They lay their plans, which, like you said, structure is more like a plan. So they have a structure in play before raising those stuff. So it is very important to understand the structure. If you don't understand the structure, you cannot be able to understand the main building. So it starts all the way from structure. That's where the whole plan starts from. That's what, if that is what structure can be for a building, then the market, you understand that structure is very important.
Definitely.
Right? So let me just give you the explanation. Market structure simply means the direction and movement pattern of the market. It helps a trader to understand whether the market is moving up, down, or sideways. Now,
up,
down or sideways. Now, there are three ways that the market can move. It can either go up, it can either come down, or it can either go sideways.
Okay.
And in just in a nutshell, the markets, the two things we can do in the market is buy and sell. Right? Now, I'm going to start with the uptrend, which is the first movement in the market. So we have three words market structures. So the first one is what? Uptrend. Now another name for uptrend is bullish. Bullish. So it simply means that the market is going on. I'm going to be sharing my screen, right?
Okay.
I'll be sharing my screen and then I'll be identifying how this stuff works. Now, because I said it is a bullish market, it doesn't mean that it is just going up. Normally, yeah, as I said, something's going up. How does it go up? Like this, right?
Definitely.
But that's not how the market structure is. So you need to understand how this market moves. You understand me? Now it moves like a zigzag, but gradually it's pushing towards the upside. Now this is how a market structure moves. It moves in higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. You can see what it's doing. It is more like a zigzag.
Yeah.
But what is it doing? It is gradually, it started from here and it has gotten to here. It has gotten to this level. So it didn't just go up like that. So it is very important to know this particular movements of how a buying market moves. It helps you. And there's a saying that says, follow the trend of the market. Follow the trend of the market. So it simply means if you are in a buying market, you do what? You buy only, right?
Yeah.
Now, you're buying only, you should know where you should buy. Because based on what I displayed here right now, you can see that the market is going up. At some point, it does what?
It comes down.
It go up.
Come down.
So you don't want to go into the markets, regardless of it is a buying market, when this market is trying to, maybe it has gone up and it is trying to come down. What if you are entering here and the market is coming down? You see you've lost money. So you should know where you should be placing a buy. It's very, very important. So we place our buy at our higher low, and we don't place our buy at higher high. So regardless of it is a buy market, there's a systematic point, a precise point, which is the higher low. Exactly. So that's that for a buying market. The next one is a bearish market structure. A bearish market structure, also known as the downtrend, right? Yes, downtrend, bearish market structure. So it simply means the market is doing what? It's coming
down.
down. Now, regardless of the market coming down, there's a systematic way for it also. Likewise, like the
Uptrend.
exactly. So the systematic way, you're not just going to see the market come down like this. It moves just like that zigzag, but it's gradually doing what?
Coming down.
It moves in lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and so forth. Sorry. Yeah. Lower low, lower high, lower low, lower high, lower. So this is how a selling market moves. And also, just like what I said about the buying market, in any trend, you follow the trend of the market. So now we are in a selling trend. What do? We follow the trend of the market.
Yeah.
So you don't buy in a selling market. Some people do buy, but like it is more like 50-50. So anything can happen. You're not sure. You're just like ready for anything that wants to happen. That's what 50-50 is. But when you're following the trend of the market, you have probably like out of 100, you have like 80 to 70% that this market should go in your direction. Now you're not gambling. Now you're very sure that something is going to happen. So that risking is it's worth it. You understand me? Now for a selling market, there's a point you should take a sell so that you don't sell and the market start doing what? Buying. Like it's like as you can see on my screen, it is coming down. At some point it does what? It goes up. At some point it does what? It comes down. At some point it goes up. At some point it comes down. At some point it goes up. So you shouldn't want to go in even if it's selling, and at that point it is trying to buy. So maybe you are placing a sell now. That's fine. Very wrong. So you should know a point where you should place your sell, which is your what? Lower high. Do you understand me? So just like in real life, you want to sell. If you're a shop owner, you sell at the high price, right? So this is more like a representation of human activities, what we see in our day-to-day life. So the diagram of a buying market that moves in higher high, higher low, that's normally if you want to buy a product and you have like three shops. This one is selling for $1, the other one is selling for $1 1 cent, the other one is selling for 90 cents. Where would you buy?
90 cents.
Exactly. Even if they are close, you choose to buy. Even if you have $1 million, you choose to buy 90 cents because of what? It is the cheapest, the lowest price. So those are the things. You just those things you just they are languages. You just need to understand it. You understand? So yeah, that I think that's for bearish market. Then lastly is a ranging market. Ranging markets. Now this is how a ranging market moves. It creates equal highs and equal lows. The highs you're seeing, sorry, they are of the same level, and the lows are of the same level. So what the market does is each time it comes up here, it will always come down. Each time it comes down, it will always come up. So some people do trade this, not necessarily like not necessarily an advice to trade. I won't advise a trader, probably you coming into the market. as a newbie, avoid the ranging market. But for the experienced one, they kind of know how to do it. I personally I trade ranging market at some point. Depending on the time frame, I will talk about time frame in our next video. But today we are sticking to market structure. Alright, so you can see what the formation of the market. Once it comes down, it goes up to that level. Once it goes to that level, what you do is probably want to sell from there, come down and buy from there. So these are a ranging market. It creates series of equal highs and equal lows. Do you understand? So yeah, I made mention of three market structures. Can you list them out for me?
The first one is the uptrend,
What can it be called?
bullish or buying market, and we have the downtrend, which is bearish or selling market, and the last one that you mentioned is
Ranging
the
market.
ranging market,
So that can also be called a consolidating market.
consolidating market.
So a buying market moves in what? In what way? How do we characterize
A
it?
buying market moves in, it's going up, but it moves in higher high and higher lows, higher high and higher lows.
Nice. What about a bearish market, which is a down?
A bear market, like it moves down, so it's like lower high, lower low, lower high, lower low.
Very well. What about a ranging market?
A ranging market, you said it moves sideways,
So
but it's like equal highs and equal lows.
very, very good. Yeah. So if you watch to this part, then probably you learned something. You learned something that is worth thousands of dollars. A lot of people pay for this information that you just got on this channel for free. So, like I said, do well to subscribe to this channel because I'll be dropping more educational content. So yeah, don't miss out. Turn on your notification button, and yeah, I hope to see you in the next video.
See you guys.
See you guys. Bye.
Bye.